So the final chart I kind of want to talk to is emotional decisions can be costly to investors. And on the left side, what this is showing is what happens if you just missed some of the best months in the S&P during the 2000 to 20 year period. So the top blue bar is invested throughout. This means that you invested in the S&P in 2000 and you stayed in it through thick and thin. Your $1 million investment in 2000 would have grown to $3.84 million by 2020. If you would have missed just 1 month, this is what's crazy, and I think that month, Dan, was like in March, April, May of 2009 when we finally bottomed in the Great Recession and the market shot up. If you just missed the best month there in 2009, you lost $440,000.
Ouch.
On that potential investment. Oops, I pulled it out 1 month. I shouldn't have done that. I got back in. 1 month cost this portfolio $444,000. And then you can see the missing the next best 5 months. Cut your portfolio down significantly and all the way down. When you go to the right side of the chart, this chart is talking about somebody that stayed invested from 2007 to the end of 2020 versus somebody that was like, the market's going down, Dan. It's 2008. I got to get out of here. And they don't get out right away. What do we tend to do? When it gets near the bottom, I've had enough, and we sell out. And then we're afraid to get back in. So what this is showing is the dark blue line shows somebody getting out when the S&P was actually down at 45% and didn't get back in until the market actually returned to its previous high. Okay, it's back up where it was. Okay, I guess I can go back in the market. Well, if you look at the lighter blue line, the gray blue line, it shows how they didn't make anything because they pulled out. When they got back in where it says I'm in, when the market recovered, the market actually went down a little bit. So they immediately had that loss and then recovered from there. But if you would extrapolate these numbers to $100,000 initial investment, if you'd have just stayed in the market, your $100,000 would have grown to $350,490.
Wow.
By pulling out and not getting into, you felt like the market recovered, you would only have made $210,000. That's a $140,000 difference.
That's a huge number.
It is. So that's kind of what I wanted to go through and just kind of remind people. We're in the market for a reason. We're looking for those long-term returns.
Yes.
And we're not going to stray off course.
Absolutely. And it's interesting, all those numbers, and you had some great quotes in there, and they're all true, and it's really a matter of, I love the one from Benjamin Graham that basically said, even the intelligent investor needs help.
Yeah.
To stay on track, and that's
because it is emotional.
It is emotional, and it's tough. It's tough not to follow the crowd, and that's why it's so important to have a wealth coach help keep you on track.
Yeah.